Hello everyone, welcome back. This is Fk from the Black Box. So in the previous video I have showed you um, gold on the monthly time frame. As you can see, we are on the monthly time frame and we had a good setups. We had a good setup on every black box and most of the trades were great. 90% of them were amazing trades. As you can see, these black boxes are everywhere. As you can see it, so this is a monthly time frame from 1970 up to 2024. As you can see it, we had some nice trades. As you can see it, okay. As you can see, we are now in 2024, and this candle is still supporting this thing. As you can see, this thing supported and made a wick. As you can see it, so it is retracing to the upside. Maybe it wants to go up. So you can see this is a 3 months time frame black box and we are still trading inside of it. So on the 6 months, on the 3 months and 6 months time frame, we are waiting for the price to come down to maybe to the downside. Okay, maybe in 2026 and 2027 this gold would have some kind of potential to come down. Okay, still. So in today's video, we'll be looking at gold on the weekly time frame. Okay, so let us go to the weekly time frame and let us come back to the very first trading. Okay, 1970 something. As you can see, this is 1970. Before that, this is a dinosaur time, and there is no trading. It's crazy, so we don't worry about that. Right here we had a black box right there, but it is kind of faint. So you can see gold made the black box and now it's broke to the upside. So you buy TP would be the height of the box right there. TP1 would be half of your profit would be out right there, and half of your trade would be left alone. You would leave that thing alone, okay? And you trail it halfway until this thing retraces and gets you out of the tree. So for more profits, okay? And the next black box on the weekly time frame, as you can see, we had a buy riser, buy, and the same thing applies, okay? Half profits at TP1 out, and the other half leave it until that thing moves a lot and a lot. And the third black box riser formed on gold, and this thing jumped up and traded up, okay, as you can see. And the fourth black box formed riser, then you buy that thing, as you can see it. And as you can see, there was a huge black box on the weekly time frame for gold, and you buy that thing again, okay. And here we got nothing. Let's back right there, and we had a black box for gold riser, as you can see it. And when you actually zoom in, you can see that this thing is right there, okay, as you can see it. So you can sell that thing and that thing trade down, but it jumped down and trade down. Finally made the third model, so you can buy that thing again, okay. Using the third model, you can buy that thing again. Not really, let's scroll again. Then we got another black box right there. Gold formed the black box in 1972, as you can see, and buy that thing and bought, as you can see. It moved like crazy. Gold was appreciating like crazy. As you can see, another black box on gold, as you can see it. You can buy that thing, as you can see it. Stop loss will be up there. Don't worry about it coming back. So it will render you out of the trade, as you can see it. Another sale for gold, black box, nice, beautiful. Then in 1973, made weekly time frame gold made the black box and you buy that thing, as you can see. This thing moved like crazy and moved up. Right there we got nothing, maybe on the higher time frame, so nothing. Let's jump. We want a sideways movement, okay? So you can see it. We had another black box right there, then sell that thing, okay, smashed it. And when it comes up again, you buy it using the third model, so buy. Rise was a black box because that thing traded down, up there, started up and traded down, so this is a whole thing right there. So you buy that thing right there, okay? Okay, that thing we had a buy right there, so as you can see black box right there, and we buy that thing. Okay, right there on RA2 we don't want that. Here we got 1, 2, then that's not good. Let's jump. Then right here we had the black box as you can see it. So what it did was it traded up and then it jumped up and traded down. So that's where you sell. That's where you sell. There is some things that you need to consider adding 5%. Okay, that is a 5%. That's 5%. So you wait for the breakout. That's not a breakout. The little poke. That's a little poke. We don't want that. Okay. And the thing that we forgot is right here, as you can see it. There was a sale. We had a sale on gold. Sales I think made the black box. Then add your 5%. 5% will cross up. So as this is for mitigation. I mean for mitigation risk mitigation, as you can say that. A good one. This one is also a good buy. You can buy this thing using the black box's first model. That is real breakout. Boom, smashed it, flashed it. That is two candles. It starts down. Nope, no good. This is great. This is great. What happened here? Add your 5% and trade up. Boom, stop loss up there. Then it will smash you down. And then we got another black box right there. Add it. Let's do it just like this. You said that thing, boom, smash it, then it went down. Okay, went down to your TP. And here we got another black box and TP hit right there, smash stop loss up there, boom, you are out. When you see this one, go to the higher time frame. Okay, go to the higher time frame. Then here we got the black box. You wait for it to break. It broke, jumped up. He sells that thing. As you can see, boom, smashed it to TP4 and beyond. Around here, nothing. We got something here. This is a black box. You buy that thing and using the third model, sell it again. You sell it. Initially, we are bearish, so we would consider a bearish movement. We would assume a bearish trend, and other thing is there is a wick here to be filled, so everything adds up. And here we add another black box. Here you connect everything, you sell that thing again. As you can see, it's this thing consolidated. Round zero finally went down. As you can see here, what happened is this thing moved down. And then unfortunately it hit your TP. I mean it hit your stop loss, right? It hit your stop loss or you are out of the trade, right? You are out of the trade. And next what you're gonna do is you intraday buy. Intraday buy stop loss, you can trade your stop loss. This thing moves a lot, this thing moved a lot, so you can trade stop loss to prevent the damage. As you can, this is the fourth model. This is crazy. So this is crazy. This is the fourth model that's happening here, which means it's up there and actually broke the rise down here. So the trade stop loss there. The only way you could lose is this one, okay? Sold, then you could lose this thing, right? Then sold, then you sell that thing. Once stop loss is it, you enter a sale. You enter a sale. Then another black box. Here we got sell that thing. So we got another black. We connect everything. Why this thing consolidate, I mean, encompasses everything. So you buy this thing again, as you can see. Then you come back here. When you see this thing, you go to the higher time frames. You go to the time frames. There is nothing here, so go to the higher time frames like the monthly, and you will see this as a couple of candles. So you can enter a buy or a sell. And here we had a nice black box right there. So you sell that thing. Right there also the same thing. You sell that thing. Where? Exactly right there was the black box. So you sell that thing. Okay. Beautiful. Simple. No indicator. No nothing. No bullshit. Everything is right in front of your face. Right in front of your face. So nothing here. Everything is moving up except right there was a black box trading sideways and broke by that thing. This thing recant, this thing moved up, we don't want that. We don't want that. And then yes, this is great, as you can see right there was great. In 1978 gold consolidated and moved up. Okay, gold again, nothing here. Nope, nothing on only two candles, we don't want that. So we got nothing here. And then we had something around here. This thing traded below the body, so that is three candles. So you buy that thing, and here it is trending up, moving up, but you can connect the whole thing and you can sell it. You can sell it. This thing moved a little bit down. I told you to connect the wicks too. Thing traded down a little bit and moved up again, and then you would enter a buy. So you would enter a buy, as you can see. Then this thing moved up, as you can see it. Right there we had another consolidation, 1979, then you buy. Right there was another one, you buy. And right there was another one, the whole thing. You buy. If you missed that, then you would enter a buy right there. A little one, little black box right there. Little black box junior. Then right there was another black box, as you can see it. Then you buy this thing, boom, smashed it upside. Another black box, the same thing applies, boom, TP hit right there, boom, smashed it. Nothing here, everything is trending up. Nope, not good here, great, it is great. This is great. Connect, then you sell this thing. You sell this thing and this thing moved up, you buy it, stop loss up there, then it will smash you out of the trade, right? So next thing what we do is we connect everything, as you can see. Gold again consolidated in 1981 and sold, retested again and then sold. Okay, as you can see, went to RTP. Next black box formed here, and then you buy, supported, boom, smashed the upside. Then nothing there, nothing, absolutely nothing, everything's moving up and down except up there we had the black box. You buy that thing, boom, smash the upside. We had another black box up there too. This was crazy, a little bit move up and immediately supported, moved up, then supported, so trail your stops, so you would protect yourself. Then nothing here go to the higher time frames. We would go to 84. 1984 there was a black box right there. So you say that thing, boom. Then when that thing broke to the upside, you buy again, stop loss up there, then you let it run. If it continues, it continues. If it doesn't, then that's not your business. Moved up and retraced, retested, then boom, TP is hit. Riser the third model form. This is clean as hell. This is crazy. Boom, smash. TP is hit actually. Then boom, TP hits on the upside. So it's nothing. When you see this, go to the higher time frame. There is no clear trend as you can see it. When you see this, the whole thing go to the higher time frame. It's crazy. It's crazy. Maybe riser we have something, but the others are very very crazy. They are crazy. So we go to the higher time frames, and once the higher time frame breaks, then you would enter a sell or a buy. And then at the turning point, we had a sell riser, boom. And that sells that thing. Then the whole thing right here, as you can see it, buy, boom, smashed it the upside. The whole thing, as you can see it right there, as he moved up, jumped up there, and TP hit and smashed the downside. As you can see it. Three candles right there. I don't like this kinds of setup. Long bodies, don't touch that. We want these kinds of things a little. Yeah, short candles and short ones. This one is great too, as you can see. But these long candles, they are crazy, as you can see. But in this case, it's a sell. And here there was a sell, and then finally came back up again. You buy stop loss up there, no worries at all. When you see this, go to the higher time frames like the monthly, one step up, right there, sell. Either trending up, nothing here, nothing here. Moving up, it's crazy. Then this is smash, nope, go to the higher time. It's crazy, no one traces this is crazy. This is crazy. Then this thing happened, right there. So you sell that thing, as you can see. This is smashed, boom, smashed, and traded up again. Then in 1990, right there, as you can see, there was a black box formed. On gold broke out, then you sell that thing, boom, smashed the downside to your TP. Another one, and another one. As you can see, right there was a buy. And stop loss up there, no one cares. Then this thing smashed down. Sell, stop loss down there, boom. So it's very very important to trade your stops, especially in this market, this crazy market. As you can see, there is no trend, there is no identifiable trend. You sell that thing, retest, boom, smash to the downside. Then we had the black box up there. You connect everything. You sell that thing. Sell. We'll come to 1992. As you can see, buy. Boom. Smashed it. Buy. Sell. Sell. As a matter of fact, let's use the marker. Okay, as you can see, buy this thing. Go to the higher time frames. Nothing there. Buy this thing. Rise there. Buy. As you can see, this thing sell. Right. Gold on the weekly time frame. As you can see, there was a buy right there. Encompass everything. Then around there was a sell, little bit sell off. Then finally ended up in the third model we buy it. And then here we had a buy. Okay, here a sell. You go to 1996. When you see, go to the higher time frame. When you see this, then we had a sell, the same thing sell, same thing sell, same thing sell. Right there was also a sell. Okay, this is a little bit faster, faster than the previous method of drawing the box. Sell. As you can see, there was a sell right there, and this is crazy. This is crazy. No one trades. This is crazy. It's like we are in some kind of stock or something. I don't like that. That thing is crazy. As you can see, there was a buy right there. It's a huge swing. Sell. Nothing around here. Maybe here sell. There was a sell that ended up being the buy, which means the third model. Then right there, go to the higher time frame. Sell that thing and sell it. Is there another sell? Right there, sell. This thing buy. This thing buy. This thing sell. This thing sell. This thing buy. Okay, right there, nothing. I am finding the sideways movement. Okay, sell that thing. This thing adds 5%, so nothing. No sell, nothing. No nothing. This thing, if you add 5%, still broke out, so you sell that thing. You buy this, and you sell this thing, and you buy this thing smashed to the upside. You sell that thing, you sell that thing, and you buy that thing, as you can see it. Okay, and in 2005, I'm sorry, in 2003, there was some kind of buy. Again, huge buy, then buy smashed. Then buy, then we had another buy, nothing here, all crazy here. So another sell, we had another buyer, beautiful. Let's come back to 2005, nothing around here, it's all crazy, except right there was a buy, a little bit buy, and finally immediately came back. Nothing here, it's all crazy. So we come back here, nothing, all trending, no black box here. No black box, except there was a buy, and then sold this thing, okay, a little bit. Then sell this thing, we buy this thing, buy it. Come back to 2008, wow, as faster than I thought. Buy, sell it, buy this thing, and buy it again. You got it. Next is where right there was nothing, was holding is a buy. Holding buy, then buy. Right there was a buy. Nothing is there. Nothing is there. So nothing around in 2011. No, there was a sell around it, then ended up being the buy or the third model, and then a buy. And we had a sell on the weekly time frame of gold buy. So there was something here, a little poke. Then we got both that thing moved up. Okay, let me clear that one. So you can this thing broke right there, so you buy that thing, stop loss up there. So we don't care if that thing retraces. Sell. When you see this, go to the higher time frame, buy this thing. Sell it. Sell. Nothing there. Let's go to 2013. 2013 we had a sell right here. Then when we come back here, we had a sell again. Right there also a sell. Okay. Nothing there. Go to the higher time frame. So when you see these kinds of choppy up and downs, but trading sideways, so that's what you're gonna do. Buy. Right, there was a buy, there was a sell, there was a buy. Nothing was there. That's crazy. Right, there was something there, a sell, and then when you see this, run to the higher time frame. Run like hell. Sell, buy it. Then you buy this thing again, okay? Right there, you buy. Go to the higher time frame. This is crazy. Buy. This is a huge sale, as you can see it. Then go to the higher time frame. This is crazy. Right there was a buy. Right there, what they sell, right? Let's go to 2021. We are finishing up. We are finishing up. As you can see, there was some kind of sell and then a buy. Finally ended up being the fourth model. Sell, buy, sell, right? So the fourth model is crazy. So we do not involve ourselves with it. Buy. Right there was a buy, and then finally being the third model. Ended up being the third model. In 2022, we had a sell right there and we had a buy right there. Isn't this beautiful? Sell this thing. This is go to the higher time frames. Sell, sell it, sell it. Let's go to what? 2024 is crazy. And nothing here, it's crazy as you can see. Nothing here, all trending. Right, there was something as you can see this thing. So in this case, what we're gonna do is, yes, zoom in. As you can see, the box will identify everything. So as you can see, this thing extends up, right there. This is the black box right there. What you are seeing is a black box, right? As you can see, this thing, what did it do? It broke the downside, which means if this thing ends up being up, if this thing moves up, this is single fake out, then we would buy. We would be looking to buy. If this thing breaks down, this is what? The second model. That is break and retest. Boom. Okay. That's what we expect. That is, it may be a break and retest. Boom. Okay. If that thing moves, continues being bullish, breaks up, then we would be assuming this thing as single fake out. So still nothing here. Still nothing. So I included that because of that we moved up. That if you want, you know, do is you can include only this. These are the consolidation right here. Okay, these are the consolidation only single fake out. The fake outs that we're gonna select are what? They are only the after the third candle has been formed. Okay, the first three candles do not decide the fake outs, do not decide the breakouts. Okay, they do not decide the model, the four models. Okay, only the fourth candle, beyond the fourth candle, the fourth one and the others beyond the fourth are the ones that determine if the market has played out the first model, played out the second model, played out the fourth model or the third model. Okay, but for example, like this, we see this thing and we would assume that this thing has a fourth model. No, it is not a fourth model. It is still the third model. If that thing breaks up, it is only a single fake out. Why? Because the breakout before the three candles have formed does not count. Okay, the breakout after the three candles have been formed are the ones that count. Okay, so this is the one fake out only, one single fake out. As you can see, TP was not hit actually. TP was not hit. Yes, it was not, which means there is a high chances that we're gonna come down. A high chances that we are coming down to zero to finish that TP, take profit, okay, like, to hit that TP, okay. But if that thing breaks up and moves up, then we would assume that thing as what? The third model, and we would be looking to buy, okay. But in this case, I have showed you on the 6 months and on the 3 months that we are coming down. So on the weekly also that we are seeing some kind of break and retest on the bearish side, which means we will be coming down to the downside. So there is a lot of wicks and a lot of wicks that needs to be filled. This week is just a manipulation. Okay, this is just a little book. It adds a 5%. If you go to the 6 months time frame, you will see that it is just a 5% of this border, right? This is whole is the black box. We are trading inside the black box. If you see it on the 6 months time frame, let me show you on the 6 months time frame. You will see that we are trading in the black box. Let me clear this thing. The dots, they are crazy. As you can see, this is counted as a 5%. If you add that thing and you add that thing, so this is the whole thing of the 6 months time frame gold from 2020 up to 2024. 4 years of trading, as you can see it. So we would assume that this thing may come down. Okay, this thing has a high probability that it comes down, because that is a little poke rise. We don't want a little poke. We want a big move to the upside before bearish candle shows up. So this is a weekly time frame for gold, and I will see you next time on the daily time frame, and we will explore more. And as you can see, this thing is consolidating around there. Oh, it is not good. Something is gonna happen, like this big candle will form. Okay, after this thing has finished consolidating. Okay, so I'll see you in the next one. So thank you for watching. Next we'll explore gold on the daily time frame. So until then, bye bye.